Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Lynn & Associates with your Thursday morning flash video for July 6th, 2017, about 9:10 a.m. Central Daylight Time. All right, I woke up this morning and obviously saw first thing President Trump in Poland addressing the Polish people, making his promises, blah, blah, blah. He's already in Hamburg, getting ready for meetings now with G20 heads of state. That is going to be the interesting part of what takes place. So let's see what the markets are doing. We also had today, by the way, jobless claims data. So that's come out, ADP data, and we'll get to all that in a minute. But the marketplace is getting ready for tomorrow's big number, which is our unemployment data. And we'll see what that does. The market's already looking for 180,000 new jobs. And if you take a look there and you step over to the bonds and the notes, you see that they're both lower on the day as well, which means the market's building into it the idea that the Fed is going to have the ammunition it needs, good jobs data to raise rates. Or maybe the data will be a surprise. We don't know. We can see that you're still getting good gains in the euro, and that's because the market still believes that that part of the marketplace is going to be raising rates. The Japanese yen today up a fraction, although, very quietly, if you've been paying attention, the Bank of Japan is not buying the same amount of bonds and other assets that it had been. It's very quietly doing a certain amount of tapering. Energy markets very much like yesterday's API data. Another 20 minutes or so, we're going to get the EIA data. Remember, everything's a day late because of the Independence Day holiday. But the market getting its bounce as we thought it might. Cotton market acting better, acting like a market that might be able to get some more short covering going. And be careful right here. Wheat went crazy in prices after the USDA reports and word of drought and so on in the Dakotas, and now the market's giving back some of those gains. Yesterday from high to low, the Minneapolis wheat, which is really the high protein wheat, from high to low went almost $1 down and then came back and didn't have that bad of a settlement price. Bean market got up today to a new recent high for the move, 996 3/4, seeing a little bit of profit taking through there. So let's talk about the data we have. ADP came out at 158,000 jobs. They were looking for better than that at 180. The U.S. May payrolls were revised downward to 230. So we have something of a quandary going. These numbers aren't that strong, yet you're seeing the bonds and notes rally as though they suspect that the data is going to be good enough for the Fed to make a move. I don't think that's that good of data. Jobless claims up 4,000 to 248. They were expecting 245. I'll call that about where it thought. Challenger planned layoffs were down 6%. So that's some strength that we're seeing compared to the prior month's cuts. Now, the trade deficit from the U.S. down to $46.51 billion. They expected $46.2, so it's still a little larger than the market had thought. And you can see the breakdown of that right through here. Germany's manufacturing orders rose 1% in May from the prior month. Have been forecast to go up, though, by 1.9%. So as good as it looks, it's got a little bit of a problem. On the other hand, their 10-year Bund has hit now 0.5%. Now remember, this is a market that went negative, so that is the best gain that it's had since the market, I think, 2016. Stats Canada shows May building permits up 8.9% over the previous month. They also revised April permits to up a bit. But if you look at home sales in Toronto, one of the biggest declines we've seen on record. I think it was 37%, so that's confusing. Canada's trade balance in May, 1.09 billion deficit, compares to April's revised down 0.55 billion. Now, a good part of that is Canada's trade with the U.S. is switching around now where they're getting a deficit trading with us. We're importing less and selling more to them. And here's a real interesting fact. China has now bought 100,000 barrels of oil a day from the U.S. since the first 5 months of 2017 when we allowed exports again. That's 10 times, of course. You can't go by the real average in 2016. We weren't a big exporter, but it's going to 180,000 barrels a day now. It's turned into a good market for us, and that's about $1 billion in sales. So as much as we hear talk about what is going on, good, bad, or indifferent between the U.S. and China, China has opened up parts of its market to us. I can talk about beef. I can talk about the fact that China does have today a crew arrived to look at our poultry markets for avian flu. So there are things that are going positive there. Here's something brand new I have never shown you before. Brand new. One of the tools that we use in our office, and we've used it, by the way, for decades, is something called pivot points. Now, if you haven't used them, they're fascinating. If you're an aggressive trader looking for shorter-term trades, this is a tool you might want to consider for your arsenal of trading. Obviously, it's all up to you. It's a very popular tool that looks at a series of lines. Now, what I did is I created for you first an understanding of the formula, and I tell you how you determine the resistance levels 1 and 2, where your support line is, your midpoint, if you will, this white dashed line, and where the other points under it are, you get 2 resistance numbers, 2 support numbers. The idea here is that you're trying to buy the support, kicking out at higher numbers above it, selling resistance, trying to come back down. It is clearly an aggressive tool. Here's how you get it. You call us. You can go to www.iraepstein.com. There's 2 videos. The first video is going to explain the formula. The second's going to show you the application. And I'm probably going to create a third one for you that shows how you now take the slow stochastic and apply it with this. I think you'll find this to be fascinating as can be. You can click up here at any point in time. If you see this icon, it's on YouTube. Click that, it'll take you to our forums. You can, underneath us, by the way, you'll see click here for Ira's free offers on a number of websites. I've not shown this before, ever. So if you're serious about learning other techniques, well, here's one besides my school. This is not in the school. This is away from it. And I'm doing a whole series like this to give you ideas about trading. I'm Ira Epstein. Hope you look for us at the end of the day videos. Have a good trading day.